Good day. This macroeconomics presentation has been completed by Syndicate 7 of the part-time PDBA program. It will incorporate an analysis of the local macroeconomic climate, the global macroeconomic climate, the business environment, and economic policies affecting the chosen company. Furthermore, strategies on how the company should effectively deal with the aforementioned and suggestions to government for sustainable economic growth are provided. The chosen company is Distal Group Limited. Distal is a South African originated company that has been listed in the JSE since 2001. It is a subsidiary of Remgro Limited. It is Africa's leading producer and global marketer of wines, spirits, ciders, and other ready-to-drink beverages. Distal prides itself on several awards it has received, including the Brandy Grand Master Award in 2020. The company has over 4,800 employees, with approximately one-third of those being female. The key cultural elements of the company include respect, trust, and mutual understanding. Distal has a goal to grow and expand its operations across Africa, whilst adding value and working with the government to address the sustainable development goals per region. Local macroeconomic climate. Gross domestic product is a key indicator of economic growth. South Africa's GDP in 2020 was $282.59 billion, down from over $350 billion in 2019. Alcoholic beverages reduced by 16.9% and contributed 0.8% of the total GDP reduction. South Africa's current unemployment rate is 32.5%. High unemployment, rising household costs, and constrained consumer spending were noted. Distal also contributed to unemployment as it reduced its contract workers to 326 from over 500 in January 2020. Inflation is caused by different factors, namely demand pull and cost push inflation. Distal's supply chain is dependent on imports from China. The company sourced 88% of its materials in South Africa, although this had cost implications for the firm. Trade increases the income of exporting companies and drives GDP. Alcohol consumption was expected to decline by almost 12% in 2020. Also, South Africa was downgraded by Moody's and Fitch's rating agencies, further retaining a negative outlook for the country. The global macroeconomic climate was analyzed in two parts. First, the African continent. The IMF highlighted economic growth to be in a decline in Africa due to the regulatory environment, instability, and inadequate institutions. However, positive economic performance was seen in non-resource intensive countries such as Kenya. Nigeria and Zimbabwe experienced 1.9% and 3.5% growth respectively. Africa's GDP growth rate was projected at 4% for 2019 and 4.1% in 2020. Distal's footprint in Africa covers Kenya, where it has 55% equity ownership, Nigeria, Angola, and other African countries. In terms of African capabilities and performance, African countries were downgraded, including Ghana, Nigeria, and Zambia. The downgrades will have an indirect implication for Distal's operations, as infrastructure investment will be reduced, such as road infrastructure necessary to access remote areas and the electricity supply required for efficiency. The group revenue fell by 3.8 billion rand, but the best performing region for trading was the African continent, with a group revenue contribution of 17.7%. The global macroeconomic climate outside of Africa. The global economy was projected to diminish by 4.9% and alcohol consumption by 12% due to COVID-19 and alcohol restrictions. Also, 25% of alcohol consumed globally was illicit, further negatively impacting the global economy. This was because demand remained and supply moved into the power of the illicit industry. The economy was unstable also due to US-China tensions and Brexit. Furthermore, the US imposed tariffs on China, Canada, and the European Union. Sub-Saharan African economies suffered indirectly with reduced Chinese demand. Africa's growth outlook was reduced from 3.3 to 3.1% for 2019, with the trade war individually resulting in a 1.5% cumulative decrease in Africa's GDP growth by 2021. In terms of the exchange rate, the rand is regarded as the most volatile currency. Distal is impacted by fluctuations in exchange rates of the UK pound, the US dollar, the euro, and the Angolan kwanza. In April 2020, the rand hit a low of 19 rand 35 cents, but later recovered to 17 rand 25 cents due to investor risk appetite. Depreciation of the rand can result in an increased costs of imports and higher competitiveness for exporting firms. Export diversification. The largest wine importers are the US and the UK, having imported $6.5 billion and $4.4 billion. South Africa exports wine mainly to EU countries, primarily the UK and the US. The US imposed tariffs on still bottled wines from France, Germany, and the UK, which will impact the industry and result in diversification to sparkling and bulk wines. The business environment. In terms of the consumer, South Africa's population has more than 50% of people under the age of 40. Distal's strategy will need to consider the preferences and behaviors of Gen Y, millennials, and Gen Z generations. In terms of socio-economic environments, alcohol abuse leads to violence and deaths and strains healthcare systems, resulting in alcohol bans during COVID-19. Distal donates to rehabilitation programs and campaigns and supports SDGs and South Africa's NDP to counter the negative impact on its brand strength and share prices. In terms of labor, South Africa has strong labor unions and strict labor laws, which shape the economic growth policies. Alcohol production is labor intensive, and trade unions leave little room for negotiation regarding wage increases. For the environmental resources, Eskom is unable to meet electricity demands, resulting in systematic blackouts. Also, notably, South Africa is a water-scarce country. The impact is higher inflation. Higher and unstable electricity means that Distal will have higher input costs, lowering its profit. Economic policies. Distal is affected by the government's decisions and the policies of the countries it exports to. During COVID-19, SARB reduced the repo rate, and this was an advantage for Distal's interest-bearing debt. Regulations prohibiting alcohol sales led to Distal's financial loss and its acquisition of more debt to finance its current obligations, and 300 million rand capital expenditure for African expansion projects were deferred. Also, alcohol sales were limited to midweek, resulting in a reduction of cash flow and revenues. In terms of fiscal policies, the alcohol industry benefits employment, directs taxes to the government, and collaborates with small-scale sellers such as tavern owners, which reduces unemployment. Distal benefits other sectors as well, such as the agriculture sector. However, alcohol abuse by end users negatively impacts the country's social, economical, and emotional wellness, which resulted in 10 billion rand in government expenditure. Excise duties and other taxes are used to cover the expenses. Distal paid over 8 billion rand tax to fiscal balance. The syndicate suggests the following strategies for Distal Group Limited. Distal bought a 20% stake in Rethink, which manufactures cannabis-based products. The group should continue to seek opportunities for offensive diversification for Distal to grow all the more. Second, it should take advantage of the imposed tariffs by increasing the marketing of its current still bottled wines in the US market. Also, it should leverage the exemption of sparkling and bulk wines. Furthermore, it should continue with its African-focused strategy to reduce reliance on the international market. Fourthly, Distal should apply backwards integration by producing sanitizers and hygienic items, as it already has the existing infrastructure and facilities required. Also, the company should invest in research and development for the use of waste materials to produce electricity and minimize wastage. Furthermore, it should automate its production lines for greater efficiency to produce more alcohol at lower costs, allowing for higher profits despite tax increases. Distal should diversify its portfolio to other products to remove its heavy dependence on agriculture, creating options that can benefit from increased inflation or high interest rates. Lastly, the company should embrace triple BEE and help its suppliers meet their requirements. In light of all the factors explored, the syndicate has the following suggestions to stimulate sustainable economic growth. First, entrepreneurship. SMMEs that get funded should be trained to produce and manufacture to foster a spirit of entrepreneurship and job creation. Triple BEE deals should be built on strict criteria that will generate sustainable jobs. Second, government capacity. Vision for industrialization must be integrated with the overall economic planning and be based on an understanding of sectoral dynamics and opportunities. It should be inclusive of the reshaping of the government departments, providing for clear leadership and coordination within areas such as skills development, energy, minerals, and agriculture. Lastly, in terms of fourth industrial revolution investment, the government should prioritize investment in technological advancement to position the country at an advantage. Also, it should adopt incentive programs that will promote skills development and entrepreneurship to boost economic growth. On behalf of Syndicate 7, thank you for listening.